Well, hello and welcome to this Moneycontrol live stream, and we are here to discuss IT earnings. Of course, that has kicked off the Q4 earnings season for us. Yesterday, we saw TCS report a pretty muted show. Margins were a miss, and even the dollar revenues were a miss. But what was, discouraging was the management commentary that was extremely bleak, if you may say so, for the next 2 quarters at least. But today, Infosys is slated to report its fourth quarter earnings, and who better than Rima Tendulkar from CNBC to put into perspective what we should be expecting from Infosys after the cautious commentary that came out of TCS management. Rima, Infosys is among the top Nifty losers today. In fact, right now it's down 3%. Is the expectation bleak when it comes to Infosys as well?
So between TCS and Infosys, prior to TCS's disappointment, right? Like say 2 days ago, the street was expecting TCS to perform better than Infosys. Right. So TCS was anticipated to grow by 1%. It actually grew by 0.6%. Now Infy is expected to grow by 0.4% in constant currency terms. This is constant currency revenue growth quarter on quarter. Now, Infy is expected to grow by 0.4%. Though there are analysts like, I think, Morgan Stanley, who believes that growth could be negative this time. Their estimate is minus 0.1. And I think what the fear is that if TCS is disappointed, and it's disappointed because the sentiment has turned. What they clearly indicated in the conference call commentary is that discretionary projects have been put on hold.
Right.
Now, this cannot be a TCS specific issue. This is going to be an industry specific issue because clients around the world are turning cautious. They said that BFSI clients are now in a rush to conserve capital. They are in a capital preservation mode. So this is something which is going to impact everyone. That's the fear. So right now the fear is that what if Infy reports a flat growth or maybe even a negative growth, and I think that's what's bearing on the stock down, which is lower by 3%. But quickly to run you through the big numbers, dollar revenue growth 1.33% at $4,721 million. Constant currency revenue growth at 0.4% for Infosys, but there is a wide range of estimates there. Margins are likely to be flat quarter on quarter, no expansion, 21.5%, and profits too seen flat sequentially at 6,553 crore. These are the numbers to watch.
Right, so those are the big numbers to watch out for. Now, Rima, TCS doesn't give guidance, we know that. Infosys will be the first IT giant to be giving guidance for the next, for this fiscal year, right? So what are your expectations on that front?
Well, consensus, it should be about 6 to 8. There are many who believe it could be 5 to 7. We also had CLSA saying that things are so uncertain. So typically they give you a 200 basis points range. Yeah. Right? 6 to 8 or 5 to 7. Yeah. He said this time don't be surprised if it's a 300 basis points range that they will give.
Okay.
So broadly expectation is between 5 to 8%. This is what the street is anticipating. But remember, it will be a significant slowdown compared to what they're going to grow this year. FY23 guidance by Infy is 16 to 16.5%. They're going to meet it even after the muted performance in Q4. So after ending the year with an over 16% growth, next year's growth guidance is going to be in mid to high-ish single digits. That's on the top line. On margins, the expectation is that margins will improve next year because the supply side situation is easing. Attrition is coming down. Companies paid a big premium to hire laterals. They needed to get work done on site, so they were hiring expensive subcontracting costs. Now that demand is moderating, the war for talent has come to an end, tech startups are laying off people.
Right.
There is no longer a scramble to acquire expensive high cost employees. So the cost bill of companies is expected to come down.
Okay.
And that is expected to drive a margin improvement. So therefore, when you look at the margin guidance from Infosys, it's expected to go up. Currently, it's 21 to 22%. Next year, consensus is that maybe they will raise the upper end of the guidance. So the new guidance could be 21 to 23%.
All right.
So that's on guidance.
So, we all know that Infosys is very conservative when it comes to guidance, right? So what is it that will constitute a disappointment on the guidance front?
I think a number below 5%. I think even a 5% number would have been a disappointment. But today, considering the stock is already reacting adversely, I think the street, in a way, is pricing in a negative guidance or commentary at least. So, as I said, the guidance range is between 5 to 8%. A number which is closer to the 5%, say maybe a 4 to 6% or even a 5 to 7% could constitute a disappointing guidance. But I think part of it is getting priced in right now. Secondly, if they don't up the margin guidance, I think that would
Right.
constitute as a big disappointment, because Infi used to see higher margins. Only last year they had down because the wage bill started getting bloated out.
higher, yeah.
But so if that situation is easing on the wage bill side, hiring is going to come down, then it's got to reflect in your margin improvement. So if they don't up the margins, the guidance, or at least the commentary on it, I think it would be disappointing.
Like, since you mentioned commentary, what are the key monitorables for you when it comes to the management commentary, especially after what we heard from TCS yesterday?
It's going to be whether they have any near-term demand visibility. If TCS had a very strong order book, $10 billion of order wins this time,
Right.
new and renewal combined. But what we couldn't get from them is that despite a strong order book number, growth is going to be there. Because the fear is that even if I have given you a contract of $10 billion today, maybe I will tell you, don't start it tomorrow, start it 6 months later.
So basically you're talking about conversion? Are you
Immediate
talking about-
conversion of your deals into revenues. That could be a
Right.
bit slower because projects are being put on hold. They want to go ahead with the digital transformation. They want to go ahead with the cost optimization, but they're saying, let's just do a part of the deal right now, one which is going to give me an immediate return. It's called ROI, return on my
Right.
investment.
Yes.
So he's saying, instead of executing the entire $100 million deal, let's just do $50 million of it, where I'm going to get an immediate return. The rest $50 million, yes, I'm going to do it, but I may just choose to do it at a later stage.
Yeah.
So that entire order book, the intent to spend, is not immediately getting translated into revenue.
Right.
Because of this discretionary projects being put on hold. And they're not just being put on hold in BFSI. The management said that there is a spillover in manufacturing, in autos, in retail to some extent. So it's a bit widespread, this sentiment turning negative. So in terms of commentary, I think you're going to be watching out for the outlook on discretionary spending, whether projects are being put on hold, and how long do you think? Whether this is a 3-month winter, or is this a 6-month winter?
You never know, things could get worse before they get better.
Things could get worse before they
Right.
get better. So BFSI, of course, is going to be top of mind, because BFSI, even before the US regional crisis blew up, was slowing down for the industry. TCS's December BFSI growth rate was lower than the September. Even for Infi, last quarter, the BFSI growth rate was just 5.5%. And now things have gotten even worse.
Even worse,
So
yeah.
BFSI anyway was turning cautious. And now with the US regional crisis, Credit Suisse UBS issue, things could get worse. So BFSI is going to be very important. And finally, just to keep this short, we're going to be looking at the supply side numbers. TCS's hiring was very muted.
Yeah.
They just added about 821
yeah.
employees on a quarter-on-quarter basis. Some believe it's because they've already aggressively hired. Their bench is fairly, their bench is quite full right now.
Yeah.
So they don't need to add on more people. But some also read it as a signal that demand is slowing down, and therefore they don't want to hire right now.
Yeah.
So I think you will want to watch the supply side and how quickly attrition is coming down. Because if attrition is coming down very rapidly, it will boost your margins. So that's another internal. Okay, let me add one more thing. TCS recently lost 2 of its presidents.
Yeah.
Ravi Kumar left to join Cognizant. He's already stepped down. Mohit Joshi is going to be stepping down. He's announced his resignation, but he'll be officially leaving the company in September. So how are they going to fill in these 2 big gaps, and is it hurting in any way?
Right. Well, that's that. So those are the factors we'll be watching out for from Infosys management commentary. But don't forget that we are getting you live coverage of the Infosys earnings when they come out in the evening. So tune into Moneycontrol for that. And with that, Rima, thanks a lot for taking
My
out time
pleasure.
and joining us and putting things into perspective for us. Well, with that, it's a wrap from us. But for more news and updates, stay tuned to Moneycontrol.